Hello everyone, welcome to Fearfully Greedy. In today's episode, I want to tell you about the latest addition to the portfolio. It's in the wine sector, but it's not a traditional player. If it's a winery, importer, distributor, retailer, it would need to be very cheap for me to get interested. Usually you get very low returns, and there are very little moats which are very capital intensive to protect and to obtain. So from the start, it didn't appeal to me a lot, but this is a disruptor, especially in the US, because that's the biggest, less efficient and growing market of them all. And the ticker is WINE in the London Stock Exchange and the NWINF in over-the-counter in the States. So it's in the OTCQX market. Remember, these and all my videos are not to be considered financial advice, including a buy or sell recommendation. Consult a professional before investing or do your own due diligence. Also, please consider I may hold position in all the discussed securities. Well, they are trying to fix a problem that we have in the States especially, but over the world, that is called the three-tier system, and the origin is of the Prohibition days, where there was a winery or an importer, then a separated entity that was the distributor, and another one that was the retailer. This is to control the market and to see who was selling alcohol and regulate that. But that creates that between you and wine, the product you like, there are three guys in the middle. One who makes it, who is the winemaker, and two guys in the middle also needing to make money from that transaction. There's some logistics involved, but still, the final price and the price you pay, there's a huge disconnect there, and the information you get from the wine you're consuming, it's also pretty disconnected, right? You have very little idea who made it and why he made it and all that. So between 15 to 20% of what you pay ends up going to the producing the wine you want and to who makes it, and all the rest goes to market and distributing it, which makes no sense, especially if it's a national product, for example. This is similar in other sectors. Sure, there are many players like dealerships and retailers, of course, but usually the margins they apply are not that big. That also ends up happening that there's disconnect between the client and who makes it. So wineries have very little draw, and the products they make have little draw, and they end up operating in very low margins or at a loss and degrading the quality of the product if they cannot go to those prices that the distributor is wants, right? Then this also creates some pricing issues because a winery will have other channels of selling, like in the tasting room or wine fairs, but then they have to price it at the same price as their retailer sells it because they sell mostly wholesale, right? So the value proposition gets damaged quite a lot there. So that's the problem we currently face in wine: overpriced products and stressed out producers in a very disconnected market, right? So what Naked Wines is offering, the Naked solution, is and what they are bringing to the table is shortening this distance between consumer and winemaker. So first in communication, getting opinion, feedback, reviews, selection of projects from the consumer, getting them on board on this wine producing, and then with costs, like having centralized marketing and distribution and production. So they are offering a cost-cutting engine to wine producing. So how does it work? There's a website and an app where you can get a subscription and become an angel. That's what they are called, paying around $40 per month, depending on the market. And those dollars sit in a wallet that you can use for later wine purchases. Becoming an angel and having this subscription gives you some software benefit, but mostly discounts on this wine, right? And then the sourcing and production of this wine is only mostly exclusive from new winemakers going solo, like usually famous from already established wineries that wanted to go in their own solo project, or from independent wineries. That's most of their sourcing. And then this product can be centralized, like from the sourcing, sourcing of the raw materials, but then the bottling, the labeling, the aging, the distribution, everything can be centralized in the Naked umbrella, right? So when possible, they are trying to go for this, but most importantly, the marketing side of it, right? It's centralized marketing through the Naked Wines umbrella. Then the distribution, how the wine is served, is straight to your door. So the wine gets to your door when you order it. One case gets to your door or multiple. Well, this model this model, of course, is replicable. Like anyone could go ahead, take this model, and with enough cash and patience, they could compete with Naked, for sure. But because there's no patent, there's nothing like that Naked is doing that no one else could, but it takes a while to get where Naked is. They are the biggest direct-to-consumer player at the moment, and we'll touch on the total addressable market later. But if you have a bigger wallet and more patience and do things right, and maybe Naked folds at some point, you could really compete with them, of course. Then I wanted to talk about the competitive advantages or moats. I grabbed them in 4 different segments. First one is in the model. So I feel they are competing in what is unfair advantages. Let's see it from different scopes and the main points. The first, against a traditional winery. First, they have 100% final client, which in itself is a moat. They are who consumes, who is more interested in this wine, who pays the higher price. It's costly to service and obtain, but honestly, if any winery could have 100% final client, they would. It adds a lot of value. Then there's diversity. We'll talk about this a bit later, but a lot of the times, a winery has like just one big product, and then he tries to market some other, but they have like a star product. With this, Naked has multiple star products, and eventually the scale that any winery could dream of, right? So those are the main points against a winery. With a distributor, in a sense, Naked is holding the client of the distributor and the provider of the distributor. So they do their job, and they can do it better. The only thing that the distributor offers is the scale, right? And then the contracts with whoever they are serving. But with scale, I think Naked model can go to very high scale, as we will see later. So another thing is that they control the entire chain. So from production to getting it to your door. If you control all of that, you can improve it the entire way and have a much more clear message across the board. Then against a retailer, is similar to distributor, where they can offer a lot of scale, but here the competition is very fierce. There are more players than in the distributor segment, and also there are many people that sell wine, many websites, many platforms, many stores. So the competition there is much more scattered. You get some data from this buying, but not as much as Naked. Naked has a lot of control on the data. Also, you are a bit tight on the distribution. Like whatever distribution want to sell you, you will have to sell yourself, right? So it's hard to introduce the products you want, or hard to introduce new products, especially if you have like stars, right? So it's hard to market them in the same stores as you are selling your star products. That's a bit of the main things I see between these traditional players and Naked. Then the fact that it's fully integrated, we touched a bit before, but you can send the same message across all the levels. This might sound like a dumb idea, and maybe it is. Call me dumb, right? But the fact that you don't need to make a margin in all your operations, a distributor has to make margin moving this wine around. Naked doesn't. He needs to make money across all the platform, but across all the group, but not in the distribution. So I think this competing against these players that are only a part of this chain, they have an advantage here. And then distribution efficiencies, since they have a bit of a more clear windshield of what they will sell, who they will sell it with, the scale they are getting, there are distribution efficiencies here. Also, the fact that it's an asset-light business, not capital-light, but asset-light. They don't need to own the land. They can buy grapes. They don't need, by the way, this is the most common way of making wine, buying the grapes. There are farmers and wineries. Then the fact that you don't need to own the winery, you can rent winery space to produce your wine. Then the fact that you don't need to own the warehouses, you can rent it or externalize it. So you can see that you don't need a lot of assets to have this model working. Then the counterparts have it very rough. Just in comparison, a brick and mortar retailer of wine, he has to buy the building, he has to accommodate it, he has to get the product, he has to get the client through the door to start getting that wine, and eventually start making money. Naked needs nothing of that. He needs other things, but you can see some of the advantages here. I say it against the winery, but the fact that it's 100% direct to consumer, if any winery could sell 100% and service it at scale, they would. 100%. Then the fact that it's a data-rich and driven business. If you see the reports, they are very thorough on seeing the metrics and analyzing the right things, how people are buying, when they are clicking, when they are buying, why, which kind of wine, making the right wine. They have over 29 million reviews at the moment. And the reports, they show that this data is increasing their efficiencies and getting the right things across and improving the business. So I said, making the right wine and selling it the right way is very important, and you need data for that. If in 2021, almost 2022, well, I recorded this 2021, maybe posted later, but I have to tell you that data is important in this kind of business. You have to see that the business that are thriving in today's day are the ones data-driven. And if not fully data, they analyze it very thoroughly. So I think Naked is doing the right thing here. The next group of modes would be scale, right? So first thing is sourcing the materials. In grapes, well, just the fact that you can secure the funds for the winemaker to get the right wines at the right prices, above market prices. But as you know, this is the most common way, buying the grapes, right? So don't think they will get land to start growing their grapes. Maybe they will. I don't think they should, right? And also with more scale in grapes, if you buy more of the farmer's crop of that year, you can get better prices, but I don't think they will explore those. In general, farmers get very bad prices in most of the world, right? So it's something they could tap in the future, not necessarily, right? Then everything that is not grape, they can really explore a lot of discounts, right? Corks, labels, barrels, bottles, all of that. Buying 20,000 or 5 million of the same item, you get ridiculous discounts, right? On orders of magnitude, right? Then the operational scale efficiencies. Grape doesn't travel very well, so you have to crush it very close to the land where it's picked. But then once you crush it and ferment it and it becomes wine travels very well. So then they can move that to a centralized winery where they produce everything there. So they can bottle, age, label, all of those. They can centralize everything else, right? And then the distribution, as more scale, as you have a less idle part of your distribution chain, you get way more efficient, and they are already seeing like that. They have a much lower cost comparatively to a direct to consumer. So getting a case to your home from a traditional winery goes from $60 to $120 in the street, and by my numbers, the approximate amount they are it's costing them at the moment is around $35. The other fact is that they have 48-hour delivery on 95% of the households they serve, right? So that's a huge moat, right? Just by service, right? So that's the points in scale that run through me, right? Then I did another category that is client relation. First, having the client a relation with it, getting the client through the door or through your website. That's a huge moat, right? That's very important. It has a premium, it's costly, but in itself, it's a moat. I maybe have said it already 3 times. I will say it 3 more, right? It's very important. Then the relationship between winemaker and consumer, most wine drinkers have no idea who made the wine. Very little. They know where it's from and the name of the winery, if they really like the product. If not, maybe they see a price and a wine, right? And they have no idea if it's good or not. Wine is where products meet art. Like if you go to a restaurant and you know the cook and he knows you and he knows he's cooking for you and he comes later after you have finished your deal, that's a very enhanced experience. In wine is the same. If you have some idea of who made the wine, that experience is much enhanced. Today we live in a digital world, so you don't need to do tours and tastings with your winemaker 24/7. You can just get online, like having a chats, having comments, having videos of the winemaker explaining their wines, and people can click in your website and do that. You could say that any winery could do that, but at the end of the day, a winemaker is your employee, right? If you have a winery, he's your employee, and if you give a lot of power to them, telling everyone that he's the one making the wine, making the decision, the soul behind that wine, well, they end up having a lot of power, and just like this, they could just decide to go on their own and do their winery, and you have given a lot of power away. So And not everything is aligned there, right? Then another thing I read is the consistency tendency of Robert Cialdini. So once people become angels and start reviewing and commenting on a wine, they want to have this image consistent. Like, that's not my own idea. I've read the book Influence some years ago, and I see that, right? I see once people have committed a small amount, like becoming a subscriber, an angel, well, they are compelled to keep being like that. So they have committed money, they have committed time, and they have committed their drinking habits to Naked. So I think they feel forced to keep doing that. Then the fact that it's a one-stop shop, I think that someone that is a subscriber or an angel won't be looking around for more wine. Maybe they will, but I think there's a wide variety, and maybe a winery could get partnerships, like to compare it against a winery with other wineries and have the same wide variety, but then the service wouldn't be the same, and then they will be compelled to sell their own wines. And I don't know, we'll comment on competitors a bit later, but I think the variety here is much wider, maybe compared to a traditional wine store, a specialized wine store. Maybe they could have similar variety, but at some point not as much as Naked, just saturating the client once he goes there, right? So variety is really there. The next bucket I thought about is flexibility and how that affects race. First, they would have client flexibility. A traditional winery will have most of their sales going to maybe 5 or 7 players, be it distributor or importers. They take a big chunk. So you are a bit on a yoke, in their yoke, right? Naked has close to 1 million clients or 1 million angels, right? So you could lose a few and not worry so much. I think that flexibility in client is very important. It's something to consider. Then product flexibility. I say that in a traditional winery, they might have a wine, or a traditional distributor, they will have a wine or a product that gets a big percentage of sales, right? And well, that product has a moat by itself, but if something happens to that product, you are a bit screwed. Naked has over 1,500 wines, where a lot of wineries have very few of those. And in these 1,500 wines, there are many star products that sell out every year, right? So that in itself is a huge moat, right? So you can move star products around. Right? Winemaker flexibility. Traditionally, a winery has one winemaker or a few, if it's a bit bigger. They have over 220 winemakers. They are top level and usually famous ones that have already kind of a following. So they lowers your cost of acquiring clients, right? Because they will, if they know the wine of that winemaker is in the platform, they might go there without thinking about it, right? This also provides a scale of their dreams, right? Having so many winemakers in so many places doing so many different things, it's the scale of their dreams for Naked and then for the winemaker also, because they don't need to invest anything to get this scale. They can be the right person to make the right wine, and Naked provides the scale. Then compare this to running your own winery, where you're doing wine a very small percentage of your time, and all the rest is capitalism, is competing with this first wine market and having to meet the numbers and having a functioning business that is profitable every year, marketing, sales, negotiations, sourcing. It's a huge headache. Compare that to Naked, where you focus on making wine, and if you make the right wine, you get profits for it. I think the alignment is there. Then I put bucket. The final bucket is economic, right? And many different things go here. First, the fact that the money enters sometimes before producing the wine. Well, you have kind of a float of money to source these wine projects, to produce this wine. This lowers your cost of capital and also offers a clearer windshield on your next quarter sales, for example, or what people are, if you know what your clients are ordering and you know they will keep ordering, you have like a clearer windshield. Then the automatic recurrence of the subscription, I think is very obvious, but it substitutes a bit of the mental real estate that you would need if you had a wine store, right? You need some mental real estate of people thinking about going to your store. If the subscription keeps ticking, of course you can take the money out, no problem. But if the subscription keeps ticking, you keep getting remembered that you have that money there for wine and you should buy wine. So this can affect some of the advertising costs once you have the client inside. And then this, since you know a bit more of what you will sell, this lowers your distribution costs. Maybe prepackaging the wine. They have a wine genie thing where they offer wines that you would like or a case that you would like, and they can prepack that, and this might lower a bit the distribution cost. Then the payback per dollar invested. This is a metric that they have reported for since many reports before, and usually they were doing like 20-year one and then 5-year one. Well, on the last report, this number took a dive. That's also because COVID bumped it before, and now it's maybe a bit harder to get this advertisement dollar or promotional dollars to be cost effective, right? I think if they can be diligent, I would like them to be spending as much as possible, right? If they keep getting it over 3, or even in 5 years over 3, I think it's a good return, right? So I'm happy them having very little profit, as we'll see later on the snapshot. Then the economics per case. Okay, so I want to differentiate between a new customer and a repeat customer. For every $1 of sale for a new customer, the cost of producing that wine would be around 40 cents. Then the cost of getting it to you would be 40 cents, and the marketing to get this client would be around 75 cents per dollar, right? So what you get is a loss of 55 cents per every $1 of sales that you have, right? The average sale per case is around $65, so $35 per case loss, right? So huge loss. Then the story changes when it's a repeat customer. So first, for every $1 of sale, the cost of producing that one is around 35 cents. This is because the average sale goes a bit up, so that's why the cost is a bit lower per $1. Then the cost of getting it to your door is 15 cents. The same idea, because the cost of getting one case is the same, but if the amount per the case is bigger, the percentage goes down. And then 15 cents go to like just having the lights on and every corporate cost and other costs, right? So you get a 35-cent profit per every dollar, 35% margin, gross margin, whatever you want to call it. The average sale is around $175, so profit of around $62 per case on repeat customers. These are ballpark numbers. They don't report those. That's the numbers I got. But I think they are more or less correct, right? Then how they are doing, I think, is a business that is able to deploy a lot of dollars in a profitable way. They could be profitable. We'll see a metric later when in the snapshot of the financials, but they could be profitable today, right? So they have $470 million in revenues in the trailing 12 months. We'll see what the total addressable market is in the next step, because the market is very big. Then the total addressable market. So the company says it's around 20 billion for the US, then 2 billion for Australia and 2 billion for the UK, right? So biggest market, US. This is wine over $10 per bottle from frequent buyers in states they are allowed to say. Some points about that. The total US wine market is around $70 billion, right? My idea, I don't think 70 billion is the total addressable market, but I'm not sure if it's 20 billion. I mean, they spend their day thinking about this 20 billion, so maybe they are correct. But let me dare to be wrong here. Let's say you have a $100 bill that it's what you usually spend in your groceries. You go to your store, and that day you see the price of every product slashed by 1/3. So 1/3 of the price, sorry. Do you think you will buy 3 times more and spend $100? Some people might. I don't think all of them. So what I feel is you will get, well, somewhere in the middle. Like you will spend, maybe buy a bit more product with your $100, or you will just buy whatever you usually buy and just pay 1/3, right? So I think that's what can happen if they really disrupt the entire market and propose this new way of selling wine this way. I think all the market is for taking, but maybe the market goes down in dollar amount a bit. Probably not. It's hard to do that because there are goals for everyone to keep making the same dollars. But maybe, right? I might be wrong here, but I think the total addressable market is even bigger than these $20 billion, because they can even explore these higher ARP products, like higher dollar amount products, right? It's also a growing market, around 2% per year in the last years. And the main idea here, like, forget this. They are a small player in a huge market and a growing market. So the only takeaway should be this. And when you hear this word, small player in a huge and growing market, this should ring a bell in your head. At least it does in mine, right? Then the progress we are getting is that they are already the biggest player in direct-to-consumer, be it $20 billion or $35 billion or 70. They are taking the market bit by bit. And if you see it in percentage terms, they are taking over, right? So by huge amounts every year, right? Then I wanted to point a bit of the obvious competitors in the next step. And first, someone who copies the model, similar model, I said bigger wallet, more patience, could really take them down, right? Scale is important, so they are the biggest player, so it will be hard for the next player. They will have to spend extra dollars here. Then we could see some wineries going full direct-to-consumer, like most of them, and then be it like an open market where everyone gets the wine they like for their favorite wineries, and then everyone ships. Yes, but maybe they are less efficient in the cost per case to ship it to your door, as we saw a bit earlier, right? There could be partnerships between wineries where they offer a wider variety from different wineries, but the interests are not aligned, I feel there. So the marketplace option is important, but then if that's an entity, there will be some regulation because you need to be a winery to do this model, right? So there's some regulation risk here. And usually, if they want to go this route and need enough scale, and maybe a group of wineries want to get a lot of wineries over the globe to offer something similar as Naked, they would need to have a very strong balance sheet. Usually, wineries don't have a strong balance sheet, so they might run into some funding issues. Then we could also see maybe a retailer partner with a distributor and become the same group, but then they have no exclusivity on the wines, no differentiation. They would sell the same wines as any other retailer with less engagement. That's what I think. Maybe they could do a platform similar to Naked and just get them involved. But these platforms have existed for a while, like these online stores that sell a wide variety of products. While the incentives are the same compared to the 3-tier system. So I think in this model, the incentives are the same as in the 3-tier system. And the winery entity, I think, is the most beneficial in the current regulation. Any of the above could really compete, right? If they do the right thing and if Naked falls, of course, there are no patents, just client base, just the relationship between everyone involved, the data, the relationships. So it's not bulletproof, but interests are aligned of everyone involved, which I think that's most important. Then risk, I don't want to waste your time here. I just think it through in reverse. What could kill Naked? Many things, and the usual ones. So execution, like production, having problems in production, in distribution, and loss of winemakers, financial problems, having not enough liquidity to pay everyone, having some brand damage where the wines are bad, spoiled. They have had some cases and they have responded the right way, right? Refunding everything, selling free wine to everyone, and making the right wine the next time, right? So they did the right thing. Then client related, if the acquisition costs go very high, higher than you can afford, they will stop growing and maybe shrink, right? So that's another risk. Then the change in behavior. If no one wants to buy wine online anymore, they will have to close, right? Then the competitors, if any of the competitors does a better value proposition, they will run into a lot of headwinds. And then regulatory, like if they say that the model that Naked is offering is not the right one, huge problem. I have to be the one, or I don't know if I have to be the one to tell you that the fast-growing disruptor has risk, many and large. So take them into account. It's very obvious that Naked is not the safest play in the world. Next, I wanted to show you the current financial snapshot, so how they are doing at the moment. This trailing 12 months or on the last year, an average number. They are not exact reported ones. It's what I think. So revenues, they have been $470 million. Net income, like even or at a loss, minus 1 million, stands still a bit. This number, if they stopped investing to get more clients and just invest in acquiring customers to keep the numbers as they have, the current subscription numbers, they would have a profit of $52 million. Then they are investing customers around $50 million, so that's why they have this almost even net income. And then the market capitalization as of today is $640 million, and the net debt, they have an extra $74 million of cash sitting around. So the stance still EBIT to total enterprise value would be around 12 times, right? This might mean nothing because this is a disruptor, and I think they should do much more in the future. But I think we are getting at a good price. That's why I have shares of this company, of course. So what's my position? The public Fearfully Greedy portfolio has 620 shares of Naked Wines at a break-even price of 669 GBX and a current value of 4,750 euros, right? It's already the second biggest position with an unrealized loss of 3%, so almost even. This portfolio is the portfolio of the channel. Every month I put 500 to 1,000 euros, and I keep sharing with you the investment thesis and my thinking behind every decision on the portfolio. At the moment, if you're interested, you can check any minute the Google Sheet. It's a link in the description where the portfolio is updated every minute. And you can see with the positions. At the moment, we have Warrior Met Coal, the biggest position, then Naked Wines, Shinoken Group, Biogen, Rai International, Interrail Edwa, Intel, TK Tankers, and Berkshire. 9 positions and cash, but at the moment, almost no cash, right? I will try to keep you updated as frequently as possible, but since I'm lately only doing investment thesis, it takes a while to get the thesis, and a value investor doesn't move the position much. So I will try to make shorter videos in between where I share you updates and thoughts of the portfolio in the middle that don't take as much time to get the ideas for the thesis and also to produce the videos, right? So if you are interested in this, please subscribe and like the video. It helps a lot on keeping the project going. And with that, that's all. I will show you the Giro count so you can see that the positions are real. And the last transactions, we can go a bit back, right? You can see that I sold some positions. I will make an update of that maybe next video, very quick video, but you can see that the last movements have been buys of Naked Wines, sorry. So, well, with all this is what I had for you. Thank you all for watching. I appreciate. See you in the next video. Be safe.